Glad to have you guys with us. So this is one of our topics that we're covering today. We're going to be looking at paper trading. We're going to be looking at two types of paper trading. So one is going to be historical paper trading. The other one is going to be live paper trading. We're going to talk about the value and benefit of both and a couple of different ways to walk through this and to think through that process. Then we're going to look at charts by TRADEway and show you what they have available from a paper trading perspective for you. My name is Jeffrey Nance. We have David Verbruggen with us as well. Misty is kind of hanging out, lingering in the back a little bit too, so she'll be along for the ride as well. You guys have a little chat feature down there. I see a lot of you guys have already found that, so congratulations there. If there's anything that you just want to say this morning, drop that over there. And then if there is a question, try to go ahead and drop that over in Q&A. So depending on how chatty people are, it is easy to lose things in that particular area, but Q&A, pretty easy to find things. So if for some reason you do have a question today, take advantage of that Q&A. David, you have anything for us this morning?
Nothing else to add. I'm looking forward to it, Jeffrey. Guys, paper trading, it's so important. It's so important to your success. So pay attention because you're going to hear some good stuff.
All right. Well, very good. So I think you guys have probably already read through your emails. You got a sense of what we're going to cover. So if at any point there was something on the bullet points and you're like, I don't think he covered that, let me know. And we'll try to make sure we go through and cover that for you. So why is paper trading important? I mean, let's start out with that. The first thing I would say is paper trading, whether you're new or whether you've been with us for a while, but you're learning a new strategy, ought to be something you ought to strongly consider anytime you're doing anything new with trading, whether that's learning a new strategy. So obviously, if I'm a newer student, everything is new, every strategy is new. Paper trading is key. One of the things that we do, and I think it's purposeful, but it can also be a little detrimental to you as a newer trader, is we just show you what's possible. All right. So you can go out there and you can make these trades, and then they're like, oh, if you traded this and then you reinvested everything you had in that trade, and then you made this trade, and then you reinvested everything you had in that trade, and then you made this trade, and then all of a sudden you're like, wow, look at all this money I have. And as a result of that, which is meant to inspire you, it obviously does. And then people get out there and be like, all right, I know they said trade one contract or whatever, but that's craziness. I've seen how much I can make with 10 or 100. Let me go do that. And the downside to that is that for most things in life, if we are learning a new skill set, we have a tendency to be better at that skill set over time. And that's true whether we're talking about playing instruments, we're talking about playing sports, we're talking about trading. There is a tendency for us to get better at our skill sets over time. Well, knowing this, we ought to be inclined then to say, you know what, maybe I should take things slower when I'm starting out rather than just diving in, and going full speed ahead. And the problem with going full speed ahead, David, is we really don't know what we don't know. Right. So you just don't know. And then we really don't know ourselves that well. Now, most of us probably think, oh, I know myself pretty well. But I've talked to a large number of students that said, man, I learned so much about myself through trading that I did not see through doing other things. So it's a revealer of character. It's a revealer of, wow, I didn't realize I struggled with fear that much. Wow, I didn't realize I struggled with greed. I didn't realize I struggled with, blah, 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 blah. Just insert the adjective there that might be used to describe you. But there's a number of things, and there's often a pattern to this. So one of the things that we're really wanting people to do is we want you to enjoy trading. So trading ought to be fun. But like most things in life, it does tend to be more fun when you are winning. There was a comedian I heard, and he was cheering on a game. And, we've kind of gone through this thing, David, where it's like, hey, don't keep score and stuff. Well, I mean, I coach little kids and they all kept score. They wanted to know what the score was and did we win. So they didn't
I've been there
matter
too.
whether like, oh, we're not keeping score. And I'd be like, but it was 6-1, So, so I heard this comedian one time, and he was, he would, every time his nephew would score, their team would score, he'd be like, yeah, yeah, he'd get all excited. And then after a few times of this, a lady from the other team that was sitting nearby turned around and said, hey, we're not really keeping score. And the guy was like, oh, really? Okay. He said, well, what are we doing here then? He said, and the lady said, well, they're here to have fun. And the guy quit back to her and says, okay, our team had fun 3 times. Your team had fun once. So, I mean, I do feel like there is this sense, right, David, that it's always more fun to win. Like you can enjoy playing the game, but the reality is we want to win. And when it comes to trading, because we want to win and because we know it's more fun to win and we like to see our account growing, I mean, that is a big reason that we actually came and received education, then we want to have positive results. But what I would really encourage you to do is to realize this is a skill set. When you look at somebody who's just learning to play, say, soccer at 3 years old, they better not have the same skill sets as a 13-year-old. If so, that is problematic. Like they're not going to be on the field very long if they have the skill sets of a 3-year-old as a teenager. So we ought to grow, we ought to advance. But the thing is, you've got to be in the game long enough to get there. I mean, 10 years is a relatively long time. I've found that as I've gotten older, time really is relative. There are certain things that take forever. And then you look up and you're like, wait, how old am I? I was just talking to a guy yesterday, and he was a 6th grader when I left a town as the youth minister there, and we were trying to figure out who do we have in common. I was just trying to think back through all these people, and I was like, whoa, you are so much younger than me. And I didn't feel like he was that much younger than me till I started doing the math, and I was like, huh, well, we're only a few years apart, but some people call those decades. It was like, what in the world? How are you 2 decades younger than me? Like, wow, what's going on? This guy's like a coach at the high school and all this stuff. I'm like, I'm 20 years older than you. What is going on here? So it's interesting. It's just relative, right? So when it comes to your trading, guys, I would encourage you to take a long-term approach. And so the first question I would ask you is, do you want to trade for a long time? Like assuming that you're here, the world doesn't end and God allows you to live for a long time. Do you want to trade for a long time? Do you want to pass this knowledge and education down to your kids or grandkids? And if the answer to that is yes, then you have to realize that you have to then stay, I'm going to say, in the game long enough to increase your skill sets. So think of it this way, guys. If I said to you, hey, look, there's a couple of holes in our backyard that our dogs have dug, but we're also getting ready to put in this like really like massive pool in our backyard. So you get the opportunity. I just need you to fill in one of those holes. Do you want to fill in this big gigantic hole that we're building for this big pool, or do you want to fill in the one that our dogs dug? And anybody in that scenario, David, would say, you know what, I think I will fill in the smaller ones. I'm gonna fill in the smaller one. Well, how does that apply to us, guys? Listen, you're gung-ho, you're starting trading, or you've been trading for a while, and you want to make a lot of money as quickly as you can. In fact, I'll ask people, would you rather have more money now or later? All right, so you guys answer that for me in chat. Would you rather have more money now or later? It seems like the answer ought to be obvious, but people are going to say now, right? Janet says later, good job, Janet. But most people are going to say now, or some people will, have the candy and they'll be like now and later. You're like, well, okay, well, which one is? No, listen, if I'm doing things the right way and my money is growing, then I ought to have more money later. Well, what that means, David, is if you have less money now, that's okay, as long as that account is growing over time. But if you said, Jeffrey, I had a lot and now I have less, your account isn't going the right direction. So, would you rather have more money when your skill sets are more advanced and you have more education, or would you rather have less money when your skill sets are advanced and you have more education? So I asked it that way. I think everybody would say, oh, yeah, I get that. I would much rather have more money when I have more skills and education. And so how do you get to that point? Well, one of the ways that I would advocate that you get to that point is by not digging a big hole early in your trading journey. Do not dig a big hole early in your trading journey. If you go out there and you start investing large sums of money without really knowing what you're doing and without really knowing where your shortcomings, if you will, fall, and areas where you're going to struggle, then and then the other thing is this, David, like sometimes we just get confused, right? Was I supposed to sell this or was I supposed to buy that? And I think I hit the wrong button. Like I didn't mean to buy that many contracts. Oh no, what do I do now? So some of it is just like, hey, this is new. And because it's new and it feels uncomfortable, like sometimes we're just like, then we kind of freeze up. And so what we want you to do is to kind of say, okay, I don't want to be in a position where I'm trading large sums of money without really feeling very comfortable with pushing the buttons, knowing how the stocks are moving and how that's impacting my options. And then also just saying, how do I respond when a stock is going my desired direction? And then conversely, how do I respond when it's not going my direction? Because both of those things are going to happen to you in your trading. That's just the reality. You're not going to get out there and have every trade that you enter go the desired direction that you want it to. That's not going to happen. And it doesn't matter how long you've been doing this. That's not going to happen. There are things that change. Just yesterday, we were talking about how bullish the market is and price points that it might go to. Then a CPI number comes out today, which is the Consumer Price Index. It tells us how much we're paying for goods. And surprisingly enough, even though the Fed has been raising rates trying to get that under control, this past month that didn't work. And it's like, oh. So now the thought is, oh, they're going to have to raise rates again. Generally, raising rates has a negative impact on the market. And of course, the market is down pretty big this morning as a result of that. Now, were you right to go bullish yesterday? Absolutely. In fact, there were 3 trades we listed, David, for the Top Gun Elite, and they were flags. And surprising enough, 2 of those are still doing really well, and one of them is kind of holding up today. Well, the flag is a really strong pattern, and it's fighting, this negative market tone. Now, will they end up working? Completely, we'll see. But generally speaking, I want to be moving with the market, right? I want to be moving with the market. And so on a day like today, if I entered a trade yesterday, how would that impact me? I mean, did I do things right? Did I get in too early yesterday? Was I too late? I mean, the market's been up for 4 days in a row. Should I have looked at that and said, oh, it's not going to go up for 5? Like, so again, it's just like, what do you know versus what do you not know? And then also just to realize, yeah, guys, listen, yeah, the market had been 4 days in a row, but it easily could have been 5 days in a row today if we hadn't got that surprisingly negative CPI number today. All right. So because that was, I guess it was positive, it was higher. I don't know if it's positive or negative, but it wasn't good, right? It means stuff is still more expensive than it should be, and definitely more than it was a year ago. So now we have this really negative response to that. So now you're evaluating all this stuff going, well, was I right to get in? Did I jump the gun? Was I, so you're evaluating all those things. So one of the things that you would have to do is then to say, okay, let me assess my thought process. How am I thinking through this? The thing I would also say is you have the ability to contact coaches. We have this great community site. You can get assistance from other students or coaches as well. That's a great thing. But it would be really nice, David, if we had entered a trade yesterday, particularly if it was moving against us today, to be like, whew, I'm glad that was a paper trade rather than this. Okay. Now, some people are like, hey, I got into puts and I'm killing it this morning. Like, yeah, great. But you just as easily could have looked at that and then you got to put in yesterday. And I'm like, oh, that doesn't look like a good idea. Now, it turned out to be great today. And of course, you know, David, that's probably the biggest thing when I hear people paper trade. The number one reason they don't want a paper trade is because they have a big gain and then it's in their fake account and they're so mad that that's not in their real account. And then all of a sudden they go from, wow, I had that one trade, and then they just jump immediately out into, you know, trading with larger amounts of money because their one paper trade worked and then it was so good and then they, you know, didn't even make any real money off of it. Now they immediately want to dive over into the you know, live trading with large amounts of money real quick. So what I would encourage you again is to realize, yes, right, there are opportunities out there all the time. You're going to miss many of those, but we want you to catch the ones that you're really looking for. So what we want to do today is a couple of things. We want to go out and talk a little bit about how I can benefit from paper trading. So one thing I will talk to you guys about is just simply historical paper trading. So what is historical paper trading? Basically, it's where we take a chart, we go back in time without having any clue what's going to happen with that stock. We look for a pattern that's predictable, repeatable, reliable. If you can draw your lines in, fantastic. But you're looking for a pattern, and then you just go back out and then just move forward one day at a time. And as you see what that stock does, then you walk through your process of, all right, what am I thinking now? Is my stock moving my desired direction or is it not? If it is, what am I going to do tomorrow? Well, it's still moving its way up towards my target. I'm going to stay in. You see the next day, oh, it's still moving up. Okay, good. Well, I mean, I'm still doing well. I'm going to see the next day. All right, so maybe it goes all the way up to resistance. Now, what do you do? All right, do you sell that thing there? Well, what a lot of us will do in a paper trading account is we understand that it's paper and we don't treat it the same way we do a real account. So what I would really strongly encourage you guys to do before we get into the whole real practical, like how do I actually push the buttons and stuff, is to realize if you really want to get the most out of any paper trading account, you need to trade with similar size option contracts or similar size shares of the actual stock. I see a lot of people, David, they'll go out there and be like, hey, I got you know, $100,000 in my account. Now I only have $50 in my real account, but I'm going to go out there and buy $50,000 worth of stock and see what that's like. But the reality is, how is that really helping you? You can't afford $50,000 of stock. You got $500 in your account, you know? So don't do that because it doesn't help you, right? So what you need to do is to trade similar, because I'll hear people say, man, I was really good at paper trading, and then it came time to live trading and I just stunk. I don't understand, why was I so good at paper trading? Most of the time that's because you don't paper trade the same way. So if you really want to get the most out of paper trading, trade the same way. Trade with a similar amount of shares or contracts that you would in a real account. Try to get the emotional feel. You know, I've got one contract. It's $5. You know, I'm not getting rich off of $5. All right, but this stock has moved against me. Now I'm losing 20. How do I deal with that? You know, if it had been 10 contracts, I'd be losing 200. Now you can think that way, right? So you can kind of extrapolate data, but but try to trade the same way that you would. Don't let your stock get to resistance and say, oh, I'd probably sell here in real life, but since it's a paper trade, let me just hit the next day. Oh, it dropped. Oh man, that's so good that I got out just like I thought. But then you didn't really get out. You're like, oh, what I would have. Well, would you or did you not? See, because when you're doing this live, you don't get do-overs, right? We don't get do-overs in real life. We get the trade. We make trading decisions based on the information we have available at that particular time. And then we assess, what did I do? Why did I do that? And in fact, I would encourage you to actually journal some of that stuff. And what you'll see is there's actually some capabilities here with charts by TRADEway to actually do that. So one is historical paper trading, going back in time, watching what a stock did from one day to the next, and then assessing what you think your actions would be based on that. And the other opportunity for paper trading is to trade in a virtual account, but you're essentially trading live. So you bought something in real time, and now you're watching that stock move from one day to the next in real time, and you're monitoring what that stock or what that option is doing. Is it gaining value? Is it losing value? And then how are you responding, but in a real-time setting? And a lot of people might look at this and say, well, why would I historically paper trade if I can just live trade? My answer to that would be, there's a lot of value in going back, and particularly going back and trying to trade through various markets. Because one of the things that you are going to do is that you are going to trade in different types of markets. So if you can go back in time and say, generally speaking, the market was doing this during this stretch, that gives you a sense of, wow, here's what my trading might have been like under these conditions. When we think about trading, and it's like weather, right? So you got weather conditions. Like right now, it's nice, it's kind of cool and sunny outside. It'd be great, to be doing this outside, right now. It's fantastic weather here in Texas. But sometimes it's going to snow. It's pretty rare, but sometimes it does. Sometimes it rains. And then here for the past several months, it was 100 and something, I think 1,000 degrees, right? I mean, it was really, really hot. It was hot. And like, that was your weather. It was hot. It's not going to rain. It's just going to be hot. So of course we would adjust our clothing to the temperature, right? And the weather conditions that are outside. We may also need to adjust our trading to the conditions of the general market from time to time. So as you're paper trading, just keep that in mind, that one of the benefits of historical paper trading is that I can go back and trade under different conditions. If patterns are predictable, repeatable, and reliable, that means that what's happened in the past is likely to repeat in the future. And so our understanding is, if I can go back and basically trade in these different conditions, that gives me an idea of how I need to either trade similarly or adjust and trade differently in similar conditions in the future. So I think there's a ton of value in paper trading. You can go back, you can see how clearly am I drawing my lines. I think this is actually a fantastic way to actually go back in time and draw lines. Like, go back and draw lines and then see, as you extrapolate the data forward, how often does that stock actually hit your support line? How does it pivot there? Does it hit your resistance line? Does it pivot there? And the more you see that happening, the more realistic your lines are, the more accurate your lines are, the more confidence that's going to give you. And it's also going to help you establish, you know what, I'm pretty good at drawing lines. I should trust those lines and trade off of those lines in the future. So I think there's a ton of value in paper trading, both historical and live. So we're actually going to look at both of those. We're actually going to look at one feature here on the Charts by TRADEway that allows us in this system. If any of you guys have tosses, think, or swim, you can also do similar things there. This is called a back test with think or swim. I think it's called think back, David. I think that's what they call it there, where you can actually go back and see option prices and how they move. Now, obviously, guys, it's super easy. to go back and see stock prices, but option prices, it's always been like, or for a long time, it was like, we can't really do that. Now we can, which is really cool, particularly if you're trying to say do calls and puts or credit spreads or debit spreads. You can actually go back, look at that historical data and see. And so we're going to do some of that in this session too. So before we go to the charts, is there anything you want to add or any questions that we need to discuss, David?
I just like to add, guys, I mentioned at the beginning how important paper trading is. And Jeffrey used a few sports examples, and that kind of brought to mind, for example, if you've never played the game of football, right? Let's pretend you've never played football and you were going to go play football. When's the best time to do it? Right in the middle of the game, like you've never touched a football before, and you're just boom, it's Friday night, lights are on, stands are packed, and they throw the ball to you, and you have no idea that 11 big guys are going to come try and smash you to the ground. You just don't even know that because you've never played football. You don't know anything about football. It'd probably be a lot better to be in a practice situation where you're learning the game. You're learning what to do. You're learning the skill. That's what paper trading is. Because if you go real trading right off the bat, and yes, I made that mistake. I did do that. You go real trading right off the bat, and you trade way too big, it can feel like you just get run into the ground. So paper trading is the way to start so that you can build that skill and then move on to real trading. We had a couple questions. I knocked some of them out. Okay. Mark's got a good question here. I'll put this one to you. How many? Actually, no. That's I was thinking about differently. I'm going to answer him on that. I'm going to type it to him.
Yeah. All right. So let's go ahead, guys. I'm going to share my screen here, and we're going to open up charts by TRADEway just so you can see what this looks like. So I saw somebody said I was wanting to paper trade, but even just trying to paper trade was a little overwhelming. And I absolutely can see how that would be true. I'm going to go ahead. You guys have seen me. You've seen David. I'm going to drop off video just so it doesn't get in the way of your screen. I know you can move us around, but I'm going to go ahead and drop off my video here. So basically, this is a Cisco, I think, is where we are. And if we go over here to research, we click on chart. I mean, obviously, we're starting with the S&P. Now, as I mentioned earlier, the S&P is down big today, big. And I had some lines here for support. It's pretty close. It's a little off here. Got a little bit below that, but pretty close. But I mean, today you can see as we zoom in here, I mean, we were above all the EMAs, probably set to climb up into this range, which we pretty much got to. But next up was way up here at 4,200. So I kind of thought we might actually get to 4,200. But then the CPI numbers came out and I was like, all right, forget that. so now we're well below all the EMAs. We're dropping down here. And so we'll kind of look at that and see what that is. So obviously that would be the first step. So just trying to figure out, well, what's the market doing? I want my stock to kind of align with that. But you might find something that goes counter to what the market's doing. So let me show you this real quick. So this is one that we were looking at last night, and it's a flag. And David, we were talking about if this thing hits the 10-day, let's go buy this thing. This is First Solar here. Now, it is a really nice flag pattern, but if you would have told me, the S&P is going to be down 120 points, is First Solar going to look very good today? I would have said, I don't think so. I don't think so. I wouldn't necessarily do that. But boy, I mean, is this thing still working? I mean, this thing is terrific still. In fact, when you look at where the low was, 131.5, and today's high is 140. I mean, this stock's up $8.50, and the S&P's down 120. That's phenomenal. It just shows to show you, how strong this particular pattern is. So, I mean, it's incredible. So now the question is, okay, we're looking for stocks that are predictable, repeatable, and reliable, but we also want stocks, that are fundamentally sound, technical sound, and that are, you know, aligning with market tone. Now, is an upward bullish flag aligning with market tone? Not even close, right? Not even close. And yet it's a fantastic trade. So even though I see First Solar is amazing, there are actually several that we looked at. Here's another one that we talked about, ENPH, and it's also doing really well today. So another flag that's doing really well. And then there was another one here, and you can see that it's the only one that's really struggling. But even Kroger here shot up this morning. So even it was trying to work. So all three of these flags that we were looking at were doing really well. So now here I've got this decision, David. I got all these, you know, or three flags here, and they're all doing phenomenal. But what's up with that? You know, I mean, do I want to go do bullish trades when the market could easily just keep dropping? Or do I want to find something that's a little bit more bearish so that I would be aligned with market tone as it was falling? So what I would say is, yeah, you can trust your pattern. And this is probably a little bit of an experience thing where you say, you know what, the pattern might be strong enough for me to go ahead and just hop in. You know, if it doesn't work, I'll stop out. I'll understand why it didn't work. Market tone was so negative, so overwhelming that the stock just, you know, the pattern didn't work. But I get it. I know why. I knew I was taking a risk. I was going counter market, but I thought maybe the pattern will be strong enough. So you know that, hey, the likelihood of stopping out is clearly there. What would be better though is to look at something and find something that aligns with market tone. Now today is such a massive reversal. It is going to be harder for us to find something at, say, maybe an ideal buy point, particularly already. You would think, oh, if it's going to drop, then it's already dropped a ton. So, you know, that's something that we'll, you know, be thinking through. So let's just go up here real quick. We'll go over here to our watch list. And let's just kind of look at these. Now, it just gives us a thumbnail version. We don't have EMAs on this look, but we can still get a sense for maybe something that might be worth looking at. And then we'll go in there and kind of talk about how we could paper trade this. So first thing, you know, that we'll notice is that these stocks, you know, AMAT, that's already fallen too far. I mean, anytime you got a 4.5% drop or a 5% drop, that's not going to be an ideal buy point, you know, far from it. So we've got two things that we have to really strongly consider here. Okay. So one is, all right, I want to go kind of bearish here, I think, at least short term, but I also don't want to be getting in a stock that's dropped so far that now I'm at a terrible buy point. Because some of these that you guys will notice, if I could drop a line in right here. In fact, let me do it with my annotation ability over here. So some of these stocks, and you'll see a lot of this, particularly in this watch list. Oh, that's black. I didn't mean for that to be black. But they've dropped so far that they are actually, all right, they're actually near support lines. So do I want to go get in a put on something that's right here at an area of support? I would think not. So be careful about that. So we're trying to catch something that's moved, but not too far. I don't want it to have moved too far because now it's at a terrible buy point. So, I mean, could it keep falling? Could it blast through support? It could. But for now, that's not one that we'd be interested in. So let's just kind of keep scrolling through here. Wow, that fell way too far. Again, 3.5%. BAH, well, that hasn't fallen too far. Well, what's the problem with that? Well, it's right here at the most recent support area. So I don't really want to buy a put there. What about this one? Well, it's down, but look at what they're doing today. They're actually buying today. Okay, I'm not pumped about that. BHP actually probably would be okay. Except it's just really weird. There's a lot of gaps on that, so I'm not pumped about that. BLDR fell too far. I mean, again, 5.5%. Now this one hasn't fallen so far, but notice the big gap up, so that's going to change the way it looks. Casey hasn't fallen very far at all, but it's actually up. Well, I don't know. We're not pumped about that, are we? Costco 3%, CPE. Again, this one's actually up on the day. So once it got down, they've actually been buying. So I'm not sure if I'm pumped about that. DHR, it's a really messy pattern, but maybe Devon. Now, oil and gas has been so hot recently, a little concerned about going bearish there, but at least we might look at that one. It's not down too much today. FANG might be a little better, but again, oil and gas is so hot, I'm not pumped about going bearish on that. So again, we're just trying to look for something that aligns, hasn't dropped too far. I mean, obviously Google's dropped again too far, 4.5%. So just pay attention to that percentage there as you're scrolling through looking for this. And then we'll just kind of say, all right, what's one that's like decent, that hasn't fallen too far, and we can find something. Then we'll go out there and we'll talk about how we can live paper trade, and then we'll actually go back. And we're actually going to go back a little bit, and then we're going to do some stuff from last week. I looked up Cisco earlier. It made a pretty cool move. So it'll be a good example of how we can back test this, and you can see what's happening there. Again, Lynn is a possibility, but again, they're not really selling today. Lulu is, it's a little tough pattern there, but maybe. And then I don't know why this keeps stalling out right here. So sometimes when I scroll down further, it picks it up. There it is. So MRK, Microsoft, too far. This one hasn't fallen very far, but I don't know, if that's a good thing necessarily. So let's see here. I'm trying to find one that I really recognize. So we can go check out some options here and kind of play through that. Pfizer is one, not a great buy point, but Pfizer might work. Let's talk through Pfizer here a little bit. So we'll go up here, click research. We'll type in PFE, get to see it on the big chart here. Okay, yeah, so it turned suddenly. Okay, why? That's weird. Probably, we have to go make sense of that. It's below the EMAs. If the market really does stay negative for, say, the rest of this week, we could go buy a put on this 46, dropping down to 45. All right, so now it's really a matter of how do I want to think through this. So obviously I'm not going to do step one where I just buy the stock because it looks like it could keep dropping. So that's not going to benefit me. So now we're over into at least step two. So we're either buying puts. We could be looking at, a credit spread, bear call. We could be looking at a bear put. I would obviously lean bear put, partly because of my preference, partly because of the type of move that we're looking at, being able to really capitalize on making the most out of that move. So you would decide kind of what strategy do you want to use, and then what does that look like? And then we'll just kind of walk through the process, because I saw somebody said earlier, it's just, it's a little overwhelming, and absolutely it would be. But if I just walked into some of your jobs and was just supposed to start doing what you did, and I had like a few hours of training, I don't think I would feel very comfortable about doing your job either, right? So I think it's good. So let's take some time. Let's go up here to options. For now, we'll just pick to this week's expiration, which is a Friday expiration. So obviously we have particular rules for all of these things. So at step two, you have this set of rules. At step three, you have this set of rules. At step four, you have this set of rules. But since we have people that may not even really be in our system yet, all the way up to some of our advanced, I'm not going to go into detail on all that. So basically, we're just going to go in here and select kind of just at the money options. So puts are on the right. We'll just do an at the money, which is basically a 47. You'll notice this is the bid. This is the ask. You'll notice this is red. It's the low price. Of course, I'd rather buy for 62, but they're saying basically they want me to buy for 66. Now, of course, I can do a limit order, try to get in the middle at 64, and we might even try to do that if we want to. All right, so for now, let's just go over here and click on that. You'll notice it populated over here. So quantity one, of course, I could change that. One contract is control of 100 shares, so keep that in mind. This option derives its value or gets its value from the movement of the stock. It's a put, so it's going to gain value if the stock keeps dropping. It's going to lose value if the stock goes up. So now let's click on trade. I've got my my choice trade virtual account here. So buy to open, one contract, this Friday expiration, 47 strike. This is a put, somewhere between 62 and 65. Now again, limit order 65. I don't have to take that price. I can get lower. Now they won't let me get down to 62 because they won't make any money there. But I can try to get lower. Let's see if they'll give me, you know, let me see if I can save myself a whopping 2 cents here. Okay, so now at this point, guys, we're assuming a couple of things. So let's talk about the assumptions that we have so far. One is that we assume that you know what a put is, how it works, and why you would consider entering a put on this particular trade. Number two is that we're assuming that you would know, based on the event that you would attended, which strike price you ought to be considering, what the pros and cons are of a short term versus a long term, in the money, out of the money, all of those vocabulary words and whatnot. But for now, we're just going to simply just go through the process here. So day order, yes, anytime I'm entering an order to buy, I want it to be a day order. I don't really have any conditions. So now, what does this look like? If I wanted to get in this trade, what would I do? Watch this, guys. It's really easy. Review. Review. All right. So let's go through the details. You're opening this thing. It's one contract, $47 put. You're talking about a 63-cent limit order. All right. So now where do we go from here? Submit. Trade is being processed. All right. Okay, so now from here, I can continue. I can add journal notes. Wow, that's really cool. All right, so they've got this little journal feature here on Charts by TRADEway. So I can go in there and kind of talk through my process, write it down. Why was I thinking about entering this trade? Let's go through some things that you might think about. Some of you guys might know this as the set method. For us at TRADEway, we just talk about, you know, what's your target price? What's your stop price? And then what are you going to do in between? What would be the factors that would influence? So it either you stop out of the trade because it didn't work, or it hits your target price. So what is the thought process behind that? What are you going to use to make your decision? So go ahead and put that information in here. You could do that, and then it would store that for you. For now, we'll just hit continue. All right, it's loading. This is still, notice it's live. Okay, so I'm not looking for live. I actually want them to fill this order or execute that order. So either one of those phrases, filled or executed, that's what we're looking for. So just to try to make sure that we do it. So what would have to happen? So if I stick to my 63, all right, one of two things would have to happen. Either the stock is going to have to move up, therefore my price would decrease. I don't really want that to happen. Or I'm going to have to increase my price to make it more likely that they will execute my price. So let's just say, you know what, I can sit here. Now that's the other thing, guys. We can sit here. How long can I let this order sit here? Well, it's a day order. I could let it sit here all day. And if I just said, you know, this is my limit, when you say it's a limit order, you say that's the most I'm willing to pay for this option, that strike price, that expiration, that's the most I'm willing to pay. And then the market maker has to say, all right, we'll either let you in for that price or we won't. But that's what we're waiting on, right? We can refresh it. They're like, nah, still not in. Well, why? Well, okay, it was 66. So it looks like the value moved up just a little bit. Okay. All right. So then what do I have to do? I'm going to have to probably adjust if I really want in this trade, which by the way, is what you would be doing in real life. So you try to get a low price. The market maker is not agreeing to your low price. So of course you're going to have to end up then raising that price so that it gets executed. All right, so it doesn't look like they're going to do it. I can go out there. What if I just want to cancel it? All right, so I don't really know if I want to get in now. Maybe it's not, maybe it's going the wrong way. Let's just say PFE is starting to turn and go back up. The whole market's starting to go back up. I'm like, no, I don't want in. All right, so cancel. All right, so now it says my status here is canceled. So I wasn't charged for this. There's nothing to see here. It was just an order that was canceled. All right, so now you can see here 62 by 66. All right, it's like, come on, man, give it to me. All right, come on, I want in. All right, oh, look what happened, guys. This is what happened. We put in an order for 63 cents. It was 62 by 66, but notice what the price is now. So the stock has dropped, the price has increased, and now it's 66 by 71. Does that make sense why they didn't let us into that trade? Yeah, because they're not going to let us in for 63 cents when the price is rising. And now we're sitting out here going, I should have just paid 66. I should have just done a market order because then I would have gotten in for 66. Now I'm still kind of chasing this and trying to figure out, well, maybe I want to get in for 69. Maybe I want to get in for 70. Right. So now you're out there, and these are things that you're going to have to do in real life. If your stock is starting to move as you're trying to enter that order and it's moving your desired direction, that price is going to increase. Well, you wanted it to increase, but like after you got in, not before you got in. And this thing is moving up while we're trying to get in. And we're like, no, I don't really want you going, So now we have to then figure out, okay, what do we want to do here? Right. So do we want to do another limit order? And let's just see, maybe we can do like 68 or something, right? Maybe 2 cents. Is that enough? Are they gonna give us that or not? We could see. Okay. All right, let's try this. Let's see what they say about that. All right, trades being processed. Cool. All right, continue. What are they saying to me though? All right, so I canceled that one, and this is just showing me my log of what I did. I canceled that order. This one is still live, and we're waiting to see. Again, I could go journal it. David, on some of them, I would be able to come in and just adjust my price from this screen. Is that something we can do here, or is there something else we would have to do differently?
Yeah, so you can hit that little reuse button. It's kind of darked out a little bit there, but
right here.
Yep,
the one I canceled.
Yep, yeah. As soon as you cancel it, then that reuse button comes up, and it'll bring up that order ticket again.
Okay.
So,
all right, but this one right here that's live, I won't be able to just adjust it while it's happening.
No, you would cancel it right there, and then you hit reuse, and it pops it right back up, and then you can make the adjustments, send it through.
So we'll do that. All right, so we'll cancel it again. They're really not letting me do it. So now we're going to go to reuse. Oh, look what's happened, David. Geez, guys, you know what? If we'd have gotten in at 66 cents, we'd be making money right now. Goodness. All right, well, let's do this. Let's go ahead and get in. This thing is really moving our desired direction. Let's just go ahead and let's just do it. Let's just get in. Let's just 73. Fine, give it to me, because I want you guys to be able to see what this looks like. All right, continue. All right, now notice. Are you kidding me? Live. All right, well, they should accept that order. I basically just told them, give me the price you want. All right, now notice what happened here, guys. For the first time, we see a different word here. It doesn't say live, it says executed. So now I'm in this trade. And so what do I want to see this trade do? Well, I want to see this stock continue to drop. The more it drops, the higher my price becomes. And then at some point now we can go over here and we can say, okay, field orders. All right, so I'm in this trade at 73 cents. Again, I could journal this or whatever I wanted to there. But now I'm in this trade. So I can go over here to positions, and now I can basically say, all right, so I got in. So what did I get in at? 73 cents. Now it's telling me based on the bid and the ask, and see here's where you're going to get this numbers. So we got in at 73, but the bid is 68. So remember, there's one contract, it's 100 shares, and that's a 5-cent differential. So this is showing me that I'm losing $5 a share. So Am I losing $5 a share at this second? Not necessarily, but I would lose $5 a share if I do this. So watch this. So let's go ahead and say, all right, let's just go ahead and close this position. So obviously, if Pfizer kept dropping, then we would just stay in this position. But let's just say Pfizer starts to go up. Now, guys, don't do this in real life, right? I mean, if you got into Pfizer, I'm just going to flip over here to another screen real quick just so we can see. But if you got into Pfizer, right, you're not going to get in and then 1 second later get out. I mean, there's nothing about this chart. This is a 1 minute chart over here. Pfizer's doing fine. We didn't have a great buy point, but it's fine. We're just doing it to show an example. But there's nothing about Pfizer where I would look at this and say, hey, we need to get out today. In fact, it could drop down to the recent low over here tomorrow. It could still get down to like 40, what is that, 46.28. Okay, so it could drop another 40 cents. And really, if it drops for several days, then it could get down to 45. So we're going to hold on to this and at least see what it's doing tomorrow. So we're not going to get out today, but if we wanted to, we could. Now I'm gonna go ahead and pretend like we're closing this. Notice here our action was buy to open. The opposite of buy is sell. The opposite of open is close. So now it's buy to open and now it's sell to close. Still one contract. Everything is the same over here. But now it's a bid of 68 and an ask of 73. So what they're basically saying is if you want to get out right now, you could get out for 68 cents. Now, of course, we would be losing money at that point, so I'm not going to do that. But if we wanted to, guys, again, you can set your price, then you click review, and if that's what you really want to do, then notice the next little screen pops up here, and then we would hit submit. Now, I don't want to hit submit because I want to hold on to it and see what happens tomorrow. But that's what we could do. And again, that's paper trading. Now, could we do something similar with a debit spread? So let's just say we thought it might fall from 47 to 46. All right, could I do a debit spread? Could I put up a debit spread on this thing? Sure enough, right? So again, we see the cost here, the cost there. I see that. So if I wanted to enter into a debit spread here, process is the same, but now I'm doing a different strategy. I'm still looking at bearish trade setups, but now I could enter into a bear put. Okay, and again, process is the same. You just hit submit there. So again, if you're learning new strategies, you want to go out there and you want to do a bear call. All right, easy enough. You just need to flip over to the call category, walk through everything we taught you at step 3, and then you enter that setup, right? So again, depending on the step 3 criteria and all that stuff, you would do that. All right. Now just remember we're buying, all right? We're buying and then we're selling for a debit spread, but we go over all that. We've got all kinds of stuff. We got a whole step 4. We've got market corners. We've got community sites and all that stuff. So if you're confused about that process, that's not the main thing we're trying to cover here. All right. Now, the next thing I want to do with you is I want to go back and do this back test a little bit. So I'm actually going to go over here to Cisco. I'm going to give you a sense of what Cisco did and why this is cool. So notice we can go back to a start date. So we're actually going to go back to the 6th of last week. Stop it. Stop it. All right, we're going to go back to the 6th of last week. My computer does dumb stuff every now and then. It's driving me crazy. All right, 6th. Why are you doing that? All right, so we went back to the 6th, and notice I'm gonna go ahead and use that Friday. Now, guys, this is September 9th expiration, September 9th. So this is not now. This is past. Okay, this is past. So we're gonna go in here and we're gonna look at this thing, and we're gonna go back again. We've got our calls and puts, and what we're gonna do is we're gonna see on this particular date. The at the money was right around here. So we're going to go ahead and we're going to buy this option here. And then notice what we can do. we're basically paying 44 cents per share. And what I'm going to do now is I'm going to go over here to this tab. Now, remember, this thing expires, the 6th was a Tuesday. The 9th is our expiration. So let's just note a couple of things. So the stock price is 44.47. What I want you guys to pay attention to is this area right over here. So as we move forward one day, you'll notice that the stock price moved up. It went from 44.47 to 45.02. So basically moved up 50 cents. All right. So what I want you to remember, and go ahead and write this number down, 44 cents. 44 cents is what we paid for that call. And what you can do is just say, all right, well, how much does the option move when the stock moves, either my desired direction? And by the way, you could do this with something that you knew was going to work. You could do it with something that you knew wasn't going to work. So you could see, well, how much does my option really lose value? Or how much does my credit spread really lose value? Or how much does my debit spread really lose value when the stock goes against me? And again, you could go back, and this is so incredible because you could do this with different sizes of stocks. So we're looking at a $45 stock. You could do it with a $15 stock. You could go do it with a $150 or $300 stock and say, you know, how much movement is required for me to see a sizable difference in my prices? You know, so it'd be really cool for that. So not only is it great, again, for going back and just seeing how this works, making sure you're pushing the buttons right, you're getting the right data, but you can go back and see this stuff as it's happening, and how does the price impact my option? So obviously the next day we went from 44 to 67. So the stock moved up about 50 cents. Our option moved up, 23 cents. The next day, now this is Thursday, our stock moved up another 30 cents. Our option has now, guys, look at this, doubled in price. We've gone from 44 to 88. 44 to 88. All right, let's see what it does on Friday. So Friday, the stock goes up to 45.77. So another 40-cent move. And this option that we bought for 44 cents is now worth $1.22. $1.22. We bought it for 44 cents. So this would have been a Tuesday to Friday opportunity. And we just, this was just again, we're not showing you how to do this as far as, what options should I buy and what gives me the best value and all that stuff. But just sitting here, just simply looking at what you could have done and how this would have worked. It's really cool to see how this played out. Now, what did this look like from the chart perspective? Well, let's just go back here and we'll just type in Cisco, right? So what did Cisco do from the 6th to the 9th? Well, all right, so it made a pretty strong move up to these EMAs on top. So it's not really surprising then to see that the value of our option increased, okay? Particularly the value of our call option. Now, watch what would have happened here though, okay? So what if, okay, rather than doing this one, we had bought a put right here instead, okay? All right, so a put makes value as the stock drops. Well, what if we thought the stock was going to drop? We paid 46 cents. So again, very similar prices here. But what happens to the put as the stock moves up? Ouch. 46 to 16. Whoa, 30 cents. That was like 75%. Well, actually, it tells me exactly what it was, David. We lost 67% on that one day. Yowzers. 67% expense. Yowzers. All right, well, let's see what happens the next day. Oh, goodness. This thing we bought for 46 cents is only worth 3. We've lost 94% of our value. Well, you know what? What does it look like tomorrow? Oh, bad. It's worth 0.
Aren't you great? Aren't you glad that's a paper trade?
Yeah, that would have been less than ideal. If you would have thought Cisco was going to keep falling, and that happened to you instead, this would have been bad. But again, guys, this is a great opportunity for you to use that back test feature and to see, hey, this was fun, David, wasn't it? when when we bought the call, but it was a whole lot less fun when we bought the put. And the reality is, guys, when you enter a trade, it's either going to work as you desired or it's not. But going back and being able to back test this, and again, this is basically taking advantage of the historical data that you have. So, you can go back and say, well, here's what Cisco did, or you can go back and just say, let's just do this. Let's go to a chart here. And what I would do is, try to go back in time. So close your eyes, right? Close your eyes, or as best you can, don't pay attention to what the stock is doing. And then go back here. So just grab this thing here and then go back to like July and then bring this back. All right. And so this is where we're seeing now. So we don't really know, if we had our eyes closed, we don't really know what's going to happen from one day to the next, do we? So once I see a pattern that I think is predictable, repeatable, and reliable, what I can then begin to do is move forward one day at a time. So let's just see if we can figure out what we might have done with this trade. So as we're moving forward, we wouldn't have gotten in at any of these prices necessarily. Okay, well, now it's at the 50 day. So if we thought it was going to drop here, we could get into a put. So let's just think through this from a historical paper trading perspective. So I've got a stock that is showing some momentum, but the 50 day is really strong. It can absolutely be resistance. So I could go out here and I could buy a put. And now I've got to think through my parameters. Well, if this breaks to the 50 day, I'm going to stop out. So go ahead and write that down. If it breaks to the 50 day, we're going to stop out. We're going to take an expense. If it drops, now I have to say, well, if it drops, what are my concerns? Well, the 10 and 5 day right here. All right. So I want to see it get below those. And then if it drops again, I'm going to target $54. So 54 is my targeted sell price. So if it hits there and stalls out, then I'm probably going to go ahead and take my profit. If it just blows through 54, then I'll ride it down to 53. But see, I'm making all these decisions I would be making in real time as if this was a real trade, because I'm treating this like it's a real trade. I don't know what it's going to do tomorrow. It doesn't do you any good to make your trading decisions as if you know what's going to happen, when in reality, in live trading, you don't know what's going to happen. But you still want to go through the process. And if you wanted to, you could go back to this exact date. You could click that date. You could actually go buy a put if you wanted to. So you can click on, this date right here, October 13th. You could go into your options chain. You could back test buying a put on Cisco on October 13th and see what those prices are like. So if you want to do that, you absolutely could do that. And I think there would be a ton of value in that. But again, think through the process. Why am I buying it? What is my profit target? What am I anticipating is going to happen with this stock? And what am I going to do if it moves my desired direction? What are my concerns about it? And then what if it goes the opposite way? What am I going to do? So let's see what does happen the next day and how we would apply what we just discussed. It opened at the 50 day, but it fell. Now, again, it fell down to the stuff we were concerned about, the 5 and 10 day here. But at least it, okay, so it moved our desired direction. That's good. Well, let's see tomorrow then. Okay, well, this is tough, isn't it, guys? I mean, on the one hand, it dropped, but on the other hand, they bought. Well, that's not what I wanted to see, right? That's not fun. That's not ideal. Oh, guess what? Well, this is sometimes going to happen to you in real life. So now, guys, what are you going to do? You want to go ahead and take your profit? You want to say, well, it didn't hit my target, but now I'm just kind of concerned that maybe it's not going to work. Now, obviously, we would probably want to look at market tone a little bit, see what that's doing. But yeah, that's not what we wanted to see. So now we got to make a decision. Do we hold to tomorrow or not? Uh-oh. Yeah, see, I mean, we were concerned about it. Now we're back here at the 50. Now it looks like we're going to have to stop out, doesn't it? Looks like it's going to break through the 50-day, doesn't it? That's what it looks like to me. Sure enough, it did. Okay. So now we're looking at this going, well, you know what? I need to take an expense on this trade. So I don't need to be in my put any longer. It dropped. It didn't really keep dropping. I was nervous about it, but I stayed in. Guys, this is where you're inclined to cheat. Okay. This is where you're inclined to cheat, because if you're in the actual trade, you either had to sell and take profits earlier. You did not hit your target. Let me reiterate. You did not, NOT, hit your target. So if you were selling here, you needed to have a good and compelling reason why you got out of this trade early, because you did not hit your profit target. But you were concerned, let's just say market was turning and you wanted to take profit early, that's fine. We always talk about that. If the whole market is turning and your stock follows, it's always okay to exit early. We saw that there was a potential for this to move up. We thought that was a possibility. We stayed in, it hit the 50-day. The next day it moved up, so we closed out of it. Now, if we wanted to, could we flip around and go, hey, you know what, this stock is so hot, let me go get in a call play here and see if it gets up to, 56.80-ish or maybe climb. We certainly could do that. It seems like it ought to do that. Okay. Oh no, great. Now it's going the opposite way. 56.80. Did we hit it right there? We got pretty close. 56.72, really close. All right. All right. So we keep kind of grabbing in that area. So now I'm not sure I like it. And then it blows up. So eventually it caught up, but it was doing some weird stuff. So if you're going to really paper trade this and it's going to be of any value to you, you need to walk through this process. Now they have earnings. And so this is why we always tell you guys, be out before earnings, because you don't know what earnings is going to bring. They're not predictable. They're not repeatable. They're not reliable. Don't sit there through earnings. Now you could go out there again. You could go back and back test this and say, what if I'd have gotten in a call right there? How bad would it have hurt me to be in a call when they have earnings the next day and it dropped that far? How bad would that have hurt me? How much money would I have lost? And you can kind of see, well, this is why they don't want us to do that. So again, you can do all that, but the whole point of paper trading, historical paper trading, a lot of value in historical paper trading is to actually treat it as if you're really live trading. Yes, you're going back in time, but if you're looking at it saying, I'm going to treat this as if I don't know what's happening in the future, that's when you're going to get the most value out of real paper trading. And that's true, guys, whether it's live paper trading or historical paper trading. I'm an absolute big time believer in the value of historical paper trading. I think there's a lot of value in just going back to a time when you don't know what was going to happen and then just doing exactly what we did, just going from one day to the next, right? One day to the next. This goes back, that goes forward. But I mean, literally, if you want to, just click on a stock, close your eyes, click on a stock, and then just kind of don't cheat, but just kind of come up here and then just start doing that. Just, going back. So you have no clue. Keep your eyes closed. And then just stop and say, okay, what is this stock doing? Oh, they just had earnings. All right, let me play it forward a little bit to reestablish whatever's happening here. All right, okay, well, all right, what am I going to do, right? So now you're just playing it forward till you see a recognizable, predictable, repeatable pattern. We might say that 20-day for a put would have been a predictable, repeatable thing. So we could have entered a put right there. So how do we play this forward? Does it really get down to $47? Oh, I mean, we're right here, guys. Are we going to see the next day? What do you guys think? Are we going to see the next day? I mean, we're getting pretty close to support. I mean, it's been a good trade. It's dropped from, just shy of, well, pretty much 50. It's dropped from 50 down to 47.5. We're targeting 47. Are we going to see the next day or not? I mean, this is it. What do you guys think? What are you doing? What are we doing with it, right? Got to make a decision. Are we going to see it or not? What do you guys think? Let's see it. No, it moved up. Oh no. All right. So what are we gonna do from here? Right? Oh, there it is. All right. So we got a fake out there. We did get to our 47, but that day right there, we probably would have sold. We'd been like, "It's not gonna do it. It's not gonna do it." And then the next day it gets there. So now you got to go through that emotion. What am I doing now? Right? I got out early because I thought I was supposed to, and then it dropped the next day. Like, did I read something wrong? Did I not understand? What did I miss? Was it market tone? How can I trade that differently? Those are great learning opportunities. And again, you don't have to go back very far to do that. You can go back just a few weeks. Just close your eyes so you don't know what's happening. Because if your eyes are open and you see what's happening, you can't possibly get the value out of it that you would if you were truly going back in time. And if you could go back in time, you could actually do that with multiple stocks. Would be really nice, just to go back to a similar time period, just kind of go through your list here and just say, what would I do with Kroger? When did it become a recognizable pattern? How would I trade it? A lot of value in doing that.
Hey, Jeffrey, if I can jump in real quick.
Yeah.
What you're showing here is very valuable with, clicking one day at a time. And then what you showed earlier was also great with the back testing capability. Now, guys, I know it can be challenging to go back and forth between those two because then you might lose your spot on the chart. So something that I found helpful and kind of the nice thing about Charts by TRADEway is browser based. So you can just open up multiple of these. Right? You can open up two Charts by TRADEways, and one of them is looking at the chart, and the other one is looking at the back testing feature in the options chain there. And then you can just move forward day by day and just keep both of them on the same day. And you can see exactly what's happening with your option price while you're looking at exactly what's happening on the chart.
Yeah, good stuff there, David. Vicky, no. So you only cancel an order before you get in. So if you decide, hey, I don't really want to be in that order, then you cancel it. But once you're in, you're in. So you're not canceling now, you're doing the opposite. So like if you bought a stock and you go to your positions, then you just click on your positions, and then your broker will automatically assume that you're wanting to do the opposite. So it would be sell. So you just, buy the stock, and then now you would sell the stock. With an option, you'd be buying to open, and then you'd be selling to close. Now, obviously, if you're doing some more advanced stuff, it's a little bit different. But basically, it's always the same thing. You're opening a position, and then you're closing that position, and your profit is the difference between where you opened it and where you closed it. So what was the price when you opened? What's the price when you close? But no, you're not canceling, right? And that's one of those good things to go through is you can only cancel before you enter the trade. But once you're in the trade, now it's not about canceling it. Now you could go in there and because we could set stop losses too, right? We could set stop losses on our virtual account. I wasn't really planning on covering all that, but you certainly could. So if you wanted to kind of mess around with your stop losses and see how those work and make sure that you understand that process, you absolutely could do that too. And it would work basically the same way. Would you look at your S&P chart each day to help? Yeah, absolutely, Eugene. That's one of the things that we didn't do. And I think that's kind of what David was saying here, is that it might be helpful so that you don't lose your place on this one to go back. I know that there are some charts where it doesn't automatically move you forward, back and forth, so like there's one that I use where I can stay on the same date and everything I switch to is still on that same date, which is super nice, but this one doesn't do that. So it's a little bit different there. Is there a paper trading workshop? No. Catherine, not yet. But I mean, we could look into it again. If you felt like it went a little fast, we tried to cover as much as we could. But again, yeah, if you felt like that was a little fast, just let us know. You might send in a question to support at TRADEway, or if you're part of one of our community sites, you could hop on there. But certainly, again, we don't. One of our major goals is to take a complex world and then make it simple. So we don't want to go too fast. So if you did feel like that was fast, the other thing too that I would say is, David, like a lot of these brokers and charts by TRADEway, I'm sure they have some tutorials, don't they, on maybe how to use their paper trading?
Exactly. Yeah, I was just going to mention that, guys, within the platform, there are some tutorials. If you click on the Help Center at the top there, and then the drop-down menu, there will be an option that says Video Tutorials or Video Library. That's the one. So there's going to be a bunch of tutorials in there to help you learn.
Yeah, and they would probably just search right there, right? Like paper trading.
You can scroll down. I mean, you could try search. I haven't done that, but you can just scroll down. But there's also some, there's 3 trainings that I put together back in May. And so if you want those, I can send you the links for those. Just email support@tradeway.com and just ask for the, Charts by TRADEway basic training, and I'll send you those links. So again, that's, I'll put in the chat here, support@tradeway.com. And I'll send you the tutorials that Jeffrey's showing you here. They're great. Some of them go a little bit fast and a little bit in depth, and are maybe geared towards people that are already traders and are just learning the new platform. The tutorials that I created go quite a bit slower and just show you every single click of the button. If you want to do a paper trade, we're going to click this. Now we're going to select this. Here's what this means, and so on and so forth. So I think both of those combined ends up giving you a pretty good overview of how to use the platform.
All right. Well, very good. So let's see here. We had a question. Let's just go back in here. I'm going to go over here to my virtual account. I'll go over here to my positions. Oh man, stock must be starting to go up. So I'll click on close. And again, I have order types over here. I think Matt has shown us, asking us about this. So stop. And then I go in here to stop, and I put in a stop price. So again, it doesn't matter whether it's a call or a put or whatever. It's just stop losing. Okay, stop losing. I want to stop losing. I'm losing value. I want to stop losing value. So how do I stop losing value? Well, if this stock if the option gets to this price, I want to stop out. So let's just say we'll put in 60 cents. Always goes below the current price, 62 by 66. So now I could review this, but basically what this is saying is pretty much when this is 60 cents or lower, then they're going to stop me out. And then you just hit review, and then you would submit that. So now I've got a stop price in there, and that's it. I mean, that's again pretty simple stuff there. I can journal that, but yeah. So now you go into here, and you've got a sell to close at 60. That's my stop out, but I'm still in the trade right here. Okay, so I'm still in the trade here, and again, when I go to my positions, it's only going to show the one position here. So again, if you're gonna close it out, then you would have to go in and probably cancel your stop loss first. Normally you have to, but we could go in and do that. But that's how you would do that. And again, you can work through all of that. If you did 30%, you just calculate what's 30% of 70, 20 cents. So 40, that's it. You just set your stop loss at 40. What you just covered, was that live or paper? That was, it's live, but in my virtual account. Yeah, Mark. So it was just in my virtual account here. It's the trade we got into on Pfizer. So it looks like Pfizer's starting to go up a little bit here. Yeah, it is. See the wick right there? So that's why my put is losing value, because the stock is going up. So yeah, if it doesn't fall tomorrow, we'll stop out and that'll be okay. I mean, that's how it works, right? Okay. All right. Anything else, David? You got anything for us? Misty just posted up a link over there Charts by TRADEway. If you're interested in learning more about that or want to get some details, she's got a link there for that. Anything else, Misty, that you want to post up, you can drop that in there as well. David, I'll let you kind of close us out then, because that's what I've got for us today. I mean, I feel like we covered a lot, theoretical stuff, the reason why it's important, and then also the actual physical ability to go in here and do that. So if you guys have any more questions or feel like, hey, well, you want us to do this again, but maybe do it even slower. Jeff says sometimes on their help center, their videos are even faster. Well, that's true. I have a tendency to talk a little slower anyway. So yeah, if we're doing these, we can certainly look into that again and just going through even more stuff if that seems like something you would want to do.
Yeah, Jeff, if the tutorials in the Help Center are too fast, that's why I created the Charts by TRADEway basic training. So definitely email support@TRADEway for that. And we'll get you the links for the basic training. It starts out with an out-of-the-box view. So I literally start out with a screen that you're going to see as you open up Charts by TRADEway for the very first time. And we walk through setting up your account. All the different settings that you can put in there, how to set up a virtual account, how to do your first paper trade. So that's the whole first part, is just your out-of-box experience to be able to use the platform functionally. So I think you're going to like that one better, Jeff. Thanks for letting us know.
Okay. All right. Well, very good, guys. We went a little over here, or I guess depending on your perspective, quite a bit over, but most of you guys stuck with us. So thanks for doing that. Appreciate you guys being with us. Take advantage of paper trading and what it offers to you and the value therein. And then if you do have continued questions about this, again, the other thing I would say, David, too, is, I'll let you answer this question. What's the worst that can happen in your virtual account?
Well, I mean, there isn't anything bad that can happen in your virtual
There you
account.
go, guys. So if you go out there,
Like, trick question.
Start hitting a bunch of buttons and you're like, oh, I think I messed something up. It's like, okay. Now you know what not to do. I mean, like, Edison said, I found a bunch of ways that don't work. And so you can't mess up your virtual account. In fact, don't they let you reset it? I think you can reset your money if you feel like, well, I don't want to lose all my money. Can't you reset your money in this thing too, David?
Yeah, you could just, if you have done absolutely terribly, you can just close or delete that virtual account and open up a new one.
Yeah. Well, you can just reset it too. Just like reset your virtual account. Go back.
Nice. That must be a new button. I haven't seen that one before.
Just sit there and be like, man, I just lost $50,000. That stinks. All right, we'll reset it. Now you got 100,000 again. So there you go. All right, guys. So don't be afraid to go try this on your own. And then if you have questions and you want to post those up on the community site, that'd be a great way to get those answered. All right. Well, thanks for being with us, David. Thanks for your time, Misty, for working in the back there, and for all you guys being with us. And we will see you next time.
Thank you, Jeff. We really appreciate it.